The Subcommittee on Space and Aeronautics will come to order. Good morning and welcome to today's hearing entitled An Examination of Future Commercial Launch Markets and FAA's Launch Indemnification Program. In front of you are packets containing the written testimony, biographies, and truth and testimony disclosures for today's witness panel. I recognize myself for 5 minutes for an opening statement. I would like to begin by thanking our witnesses for taking time from their busy schedules to appear before us this morning and share their wisdom about the role of the Federal Aviation Administration's Launch Indemnification Program. I realize you and your staff devoted considerable time and effort preparing for this hearing, and I want you to know that your expertise will help inform this committee and Congress during the coming months and years on this issue. The Federal Aviation Administration's Launch Indemnification Program was created in the 1980s to provide a structured, risk-sharing regime to address third-party liability to protect the uninvolved public and property. As part of its commercial licensing process, FAA requires launch companies to purchase third-party liability coverage from the insurance market at a level calculated by the agency to be the maximum probable loss. As a consequence of these calculations, FAA's decision sets the threshold at which federal coverage begins, up to a maximum limit of $2.7 billion. Since the program's inception, over 200 commercial licensed launches have been flown without one federal dollar being paid out in damages. Today's hearing will examine whether federal launch indemnification is still required, and if so, if the program is properly structured to serve existing and future markets. FAA's Launch Indemnification Authority expires at the end of this calendar year, compelling Congress to consider the program's merits and the role it plays in the international launch marketplace, and the necessity to pass legislation extending the program's authorization for future years. Notwithstanding the high reliability of today's generation of launch vehicles, many industry experts advocate extending the indemnification program in part because of the inherent riskiness of launching payloads to orbit. Catastrophic launch failures are deemed to be a low probability event, but understandably one that could result in extremely high damages. They also urge competitiveness, asserting that were the program to lapse, launch customers would shift their business to other spacefaring nations offering some form of government-backed indemnification coverage. Over the last 10 to 12 years, the number of commercial launches in the United States has significantly declined to the point that last year there was not one licensed commercial launch, primarily as a result of pricing competition. However, with the advent of NASA's commercial cargo program, commercial launches from U.S. spaceports are expected to dramatically rise. Through 2016, FAA estimates that SpaceX and Orbital will launch 20 cargo resupply missions to the International Space Station, with an equal or greater number of cargo flights to be completed between 2016 and 2020. Commercial crew flights to ISS are also a distinct possibility later this decade, adding 2 additional flights per year once service is established. The same forecast predicts around 230 additional commercially procured launches in the global marketplace by 2020 in support of telecommunications, satellite imagery, and science payloads. Domestic launch service providers will need to remain competitive to win a portion of this market. It also bears mentioning that re-entry events are also covered under indemnification, and while they have not been a regular feature of commercial launches to date, SpaceX's Dragon capsule is changing the equation, having flown 2 successful re-entries with at least a dozen expected through 2016 and perhaps many more in the years beyond. Commercial crew launches late this decade will also be a new form of commercial service, and while I anticipate those vehicles will have a very high reliability record, it bears asking the question, if launch vehicles carrying capsules with abort capabilities and associated failure detection systems changes the probability of launch aborts, and whether this in turn will alter FAA's maximum probable loss calculation in any appreciable way. Before closing, I want to digress for 1 minute to respond to an assertion made last week about SpaceX's Commercial Orbital Transportation Services demonstration flight to the International Space Station. Speaking before an audience in New York, John Holdren, director of the White House Office of Science and Technology Policy, said about the SpaceX flight, This represents an entirely new model for the American space program, one initiated by this administration, and one that, despite the hand-wringing of naysayers who said it would never work, now promises to change forever the nature of U.S. space exploration and human space flight. Mr. Holdren's statement is at best misleading. The Commercial Orbital Transportation Services Program was proposed by the Bush administration in 2005 and authorized by Congress. The COTS contract that funded SpaceX mission was awarded in 2006. The Commercial Resupply Services contract won by SpaceX and Orbital was announced at the end of 2008. Let the record be clear. I look forward to today's discussion, and I wish to again thank our witnesses for their presence. I now recognize Mr. Costello for an opening statement.
Mr. Chairman, thank you. And Mr. Chairman, I thank you for calling this hearing today. In March, we had a similar hearing to examine the FAA's Office of Commercial Space Transportation fiscal year 2013 budget request. Also, the Aviation Subcommittee of Transportation and Infrastructure, we've held a number of hearings concerning the future of NASA's human spaceflight programs, which I have chaired and Mr. Petri has chaired as well. I agree that it's important to continue to focus on this issue in our subcommittee, given the fact that the public needs a clear understanding of the risk involved with commercial space transportation, and it will need to be convinced that those risks are being effectively managed. Mr. Chairman, I have additional comments, and I will place my statement in the record so that we can go forward and hear from the witnesses. So I look forward to hearing their testimony. I thank you.
Thank you, Mr. Costello. If there are members who wish to submit additional opening statements, your statements will be added to the record at this point. At this time, I would like to introduce our panel of witnesses, and then we will proceed to hear from each of them in order. Our first witness is Dr. George Neild, Associate Administrator for Commercial Space Transportation at the Federal Aviation Administration. He has over 30 years of aerospace experience with the Air Force, NASA, and in private industry. Dr. Neild came to FAA from the Orbital Sciences Corporation, where he served as Senior Scientist for the Advanced Programs Group. Our second witness is Ms. Alicia Cackley, Director of Financial Markets and Community Investment Team at the Government Accountability Office. Ms. Cackley has been with GAO since 1990 and is a member of their Senior Executive Service, responsible for directing program evaluations and policy analysis studies related to consumer protection, insurance, housing, and finance issues. Our third witness is Mr. Frank Slazer, Vice President of Space Systems at the Aerospace Industries Association. Prior to taking his current position, Mr. Slazer worked in the aerospace industry for over 30 years with leading launch providers including McDonnell Douglas, Boeing, United Launch Alliance, and Northrop Grumman. And our final witness is Ms. Allison Alfers, Vice President of Defense and Intelligence, Digital Globe. Ms. Alfers previously served for 5 years as General Counsel, and prior to joining Digital Globe, she served in executive positions with other private sector firms, including as Vice President and General Counsel for Space Imaging Incorporated. Welcome to you all. As our witnesses should know, spoken testimony is limited to 5 minutes each. After all witnesses have spoken, members of the committee will have 5 minutes each to ask questions. I'll now recognize our first witness, Dr. George Neild, to present his testimony.
Chairman Palazzo, Ranking Member Costello, and distinguished members of the subcommittee, good morning, and thank you for inviting me to speak with you today. I would like to begin by offering the administration's continued support for extending the Commercial Space Launch Act indemnification provision for commercial launch and reentry operators for 5 years beyond its current statutory expiration date of December 31st, 2012. This support is in line with the Commercial Space Transportation Advisory Committee finding that extension of indemnification past December of this year is critical to the viability of the commercial launch industry in the U.S. The Federal Aviation Administration's Office of Commercial Space Transportation licenses and permits commercial launches and reentries. As part of its licensing and permitting mission, the FAA administers financial responsibility and risk-sharing requirements for commercial launch and reentry operators. Congress established the current system in 1988. It has maintained the regime's functionality and effectiveness over the past 24 years by enacting 5 extensions of the provision providing for conditional payment of excess claims, subject to congressional appropriation. The success of the existing regime is demonstrated by the fact that during this period, There have been 207 licensed launches, all completed without any fatalities, serious injuries, or significant property damage to the general public, and without the need for any liability payments by the government or the taxpayer. The current liability and risk-sharing regime consists of 3 tiers. Tier 1 includes the most probable risks, which are taken on by the operator. The size of the first tier of risk is calculated by the FAA as the maximum probable loss, or MPL, that a launch or reentry could cause. The FAA's regulations define MPL to mean the greatest dollar amount of loss for bodily injury or property damage that is reasonably expected to result from a licensed or permitted activity. Under the Commercial Space Launch Act and FAA regulations, a launch operator must obtain insurance or otherwise demonstrate financial responsibility to cover the MPL. An operator's responsibility for the risk of maximum probable loss is limited by statute to no more than $500 million for potential third-party liability. The second tier of risk consists of liability for losses exceeding the amount of insurance procured. The statute provides that Congress may appropriate up to $1.5 billion, adjusted for inflation, to cover successful third-party claims against participants in a launch or reentry. The statute specifically states that claims against spaceflight participants are excluded from this authority. The third and final tier of financial risk consists of liabilities for third-party claims above the $1.5 billion. These risks are the least likely and, again, are assumed by the launch or reentry operator. I believe that the current liability and risk-sharing regime is well suited to cover emerging activities such as commercial cargo and commercial crew, and both orbital and suborbital flights of reusable launch vehicles. Although the MPL methodology was specifically developed to accommodate unmanned expendable launch vehicles, the methodology is still appropriate for suborbital or orbital flights involving human crew or spaceflight participants, because the MPL is not an estimate of risk to crew or spaceflight participants, but rather to third parties, including members of the public and non-flying United States government employees. Spaceflight participants and crew are not third parties. The benefits of indemnification are many, both to industry and the United States government. As Congress itself recognized by statute, the development of the commercial space transportation industry enables the United States to retain its competitive position internationally, contributing to the national interest and economic well-being of the United States. Extension of the indemnification provision would continue to enable industry to attract and maintain a customer base in the face of international competitors who offer more certain indemnification. With the help and leadership of Congress, commercial space transportation will continue without the risk of significant financial setback, and the private space industry in the United States will continue to grow with new jobs, new technologies, and new innovations. Again, I'm grateful for this opportunity to speak before you today, and I'm happy to answer any questions you may have.
I now recognize Ms. Alicia Cackley for 5 minutes to present her testimony.
Chairman Palazzo, Ranking Member Costello, and members of the subcommittee, I am pleased to be here today to talk about the Federal Aviation Administration's Launch Indemnification Program. As you are aware, a catastrophic commercial launch accident could have a significant impact on the uninvolved public or third parties in the form of personal injuries or property damage. In anticipation of such an event, a launch company must purchase a fixed amount of insurance for each launch, per calculation by the FAA. According to the Commercial Space Launch Act Amendments of 1988, or CSLA, the federal government is then potentially liable for claims above that amount, up to an additional $2.7 billion as adjusted for inflation and subject to congressional appropriations. In my statement today, I will discuss, first, a comparison of the United States government's indemnification policy to policies of other countries. Second, the federal government's potential costs for indemnification. Third, the ability and willingness of the insurance market to provide additional coverage. And finally, the effects of ending indemnification on the competitiveness of U.S. launch companies. My statement is based on ongoing work that we are conducting at the request of this committee and the Senate Committee on Commerce, Science, and Transportation. We expect to issue a final report at a later date with recommendations as appropriate. Turning to the comparison of the U.S. government's indemnification policy with those of other countries, our work to date indicates that the United States provides less indemnification for third-party losses than key competitors such as China, France, and Russia, because those countries put no upper limit on the amount of their coverage, while in the U.S. coverage stops at about $2.7 billion per launch. In all these countries, however, including the U.S., these commitments to pay have never been tested because there has never been a third-party claim that exceeded the launch company's insurance and thus reached the level of government indemnification. Looking at the potential cost to the federal government of indemnification for third-party losses, it is currently unclear. Estimating probable losses from a rare catastrophic event is difficult, and insurance industry officials and risk modeling experts told us that FAA's method of calculating maximum probable loss is outdated, has not been reviewed by outside experts, and may not be sound. An inaccurate calculation that understates the amount of insurance a launch provider must obtain would increase the likelihood of cost to the federal government, whereas a calculation that overstates the amount of insurance would decrease the likelihood of federal costs. In addition, the planned growth in commercial launches, including manned launches, could increase the number of launches eligible for CSLA coverage and thus potential costs for the federal government. FAA officials said that their method for calculating maximum probable loss was reasonable and conservative, but they agreed that a review could be beneficial and that involvement of outside experts might be helpful for improving their methodology. Overall, they said use of more sophisticated methodologies would have to be balanced with the additional cost to both FAA and the launch companies that would result from requiring and analyzing additional data. With respect to the ability and willingness of the insurance market to provide additional third-party liability coverage, industry representatives we contacted told us the market is generally willing and able to provide up to $500 million of coverage per launch. Because the amount of insurance FAA requires launch providers to obtain averages about $99 million per launch, and coverage available through CSLA is about $2.7 billion above a launch's maximum probable loss, insurers could provide some of the coverage currently available through CSLA, namely the difference between the maximum probable loss and the $500 million the industry indicated was the most they might provide. However, industry representatives cautioned that the amount and price of insurance that they might provide could change quickly if a large loss were to occur. Finally, while ending indemnification could potentially decrease U.S. competitiveness, this depends on many factors, so the actual effects are currently unknown. Launch companies and customers GAO contacted believe that ending federal indemnification could lead to higher costs for U.S. launch companies. If those costs are passed on to customers, U.S. launch companies could be even more expensive and therefore less competitive than their foreign counterparts. However, it is unclear exactly how much the cost of third-party liability insurance coverage might increase in the absence of federal coverage. And while launch customers said that price and vehicle reliability were key factors in their choice of a launch company, it is also not clear whether the increase in insurance costs alone would be sufficient reason for a launch customer to choose a foreign launch company over a U.S. company. Mr. Chairman, this concludes my prepared statement. I would be happy to respond to any questions you or members of the subcommittee may have.
I now recognize Mr. Frank Slazer for 5 minutes to present his testimony.
Thank you, Mr. Chairman. I'm here on behalf of the Aerospace Industries Association, organization of approximately over 350 companies. Over 350 companies representing about 90% of the U.S. aerospace business in this country, creating about 3.5 million jobs nationwide. I appreciate this opportunity to testify in support of the FAA's Launch Indemnification Program. AIA wishes to stress to the committee the importance of reauthorizing the Commercial Space Launch Act risk mitigation provisions, substantially extending or eliminating the sunset provisions of the Act, and removing the upper indemnification cap for space launch activities. U.S. space launch capabilities are essential to our nation's security and its ability to lead in space exploration. To sustain this capability, a healthy launch industrial base is needed, and to mitigate cyclical impacts. This would ideally include both military, civil government, as well as commercial businesses as customers. As Chart A shows, the U.S. once had a very robust commercial launch industry position. This is a chart that shows the geosynchronous launches that were previously made by the United States from 1990 to 2001. That bluish part of the bar towards the bottom represents the number of U.S. launches. There were comparable numbers of non-geostationary launches for systems such as Iridium and Globalstar at that time. Unfortunately, as shown in Chart B, the next one, our launch industrial base has lost commercial market share and is struggling to adapt to declining demand by government, especially since the end of the Space Shuttle program. International launch service providers have been aggressively winning commercial opportunities, often with the help of their governments and through financial assistance or low-cost financing. The sad reality is that U.S. launch services now have a negligible share of the world commercial market. And as you noted, Mr. Chairman, in 2011, there were no commercial orbital launches from a U.S. spaceport. Despite the dismal record trend for American launchers, new investments by U.S. industry, including several AIA member companies, are enabling the emergence of new domestic space launch systems. The willingness of our private sector to commit resources to develop new U.S. launch capabilities is a uniquely American development that should be supported. No other nation in the world has a similar effort underway. These new systems have the potential to increase the U.S. share of the commercial launch market, open up new markets, and create jobs. Chart number C shows a conservative estimate, again by the FAA through their Commercial Space Transportation Advisory Committee, of the potential future market. And this is not blue sky, wild-eyed opportunities. These are fairly baseline capabilities already in place, not really even counting the potential new markets enabled by these new systems. Our companies are making their investment decisions within the current launch policy business framework and against strong international competition. Mr. Chairman, the U.S. space launch industry is not seeking subsidies, but it does require a stable and predictable business environment, one that will be enabled by maintaining the existing launch risk mitigation framework. It is worth noting that foreign launch competitors already benefit from more generous indemnification rules and other advantages. FAA's launch indemnification program has been in place for over 20 years, providing critical risk management and supporting the emergence of this new domestic commercial launch market, benefiting our broader space industry, technology leadership, and ultimately our nation's security without costing U.S. taxpayers a dime. Our industry needs the more level playing field provided by the FAA's program. For the U.S. to take a purely laissez-faire approach to commercial launch business when competing against Russian, European, and other nations who operate under more favorable risk management frameworks would amount to unilateral disarmament when we are already at a pricing disadvantage. Even if U.S. firms could insure for the initial risk commercially, it would add costs that their competitors do not have to bear, making U.S. commercial launch sales even more difficult. Given that our current risk approach has been in place for so long, it is not clear if sufficient additional underwriting capability is available in the space insurance market. In the end, adding new uncertainty will harm U.S. industry without saving the government any money. In fact, the CBO has previously estimated the FAA's indemnification authority has had no budgetary impact on the government. Our rationale for continued indemnification support is not narrowly focused on its benefits just for industry. It also provides benefits for the federal government and America. In recent years, the U.S. government launch costs have increased substantially, partly due to the shift of commercial satellite launches to foreign systems, adversely impacting the domestic space industrial base. The success of new launch ventures will help the federal government since they offer the potential to reverse this trend. Without a renewal of the regime, our nation's space industrial base may forego business that could help spread the fixed cost of space launch capabilities between government and commercial customers. Again, savings that could be passed on to taxpayers. CSLA enables U.S. launch providers, like their foreign competitors, to operate without betting the company with every single launch. This launch indemnification backstop has been renewed 4 times since 1988, creating a reasonable expectation it will be renewed again in the future, but without entirely eliminating the business uncertainty. Given the long lead times for space launch development and the need for stable policies to promote investment and maximize our industry's competitiveness, Congress should eliminate the sunset provisions of the Act or at least extend them for a much longer time than prior renewals. To be consistent with our international competitors, AIA recommends Congress remove indemnification caps beyond Tier 1 for space launch activities. In conclusion, AIA sees continuing FAA's launch indemnification as a very low-risk way to support our nation's vital space launch industrial base with substantial upside potential to enable new markets, create jobs, and assure U.S. space leadership. American industry is investing capital and innovative ideas to create this new future. It would be a shame if these efforts were to founder due to a lack of even a partially level playing field with foreign competitors. Thank you, and I look forward to your questions.
I now recognize our final witness, Ms. Allison Alfers, for 5 minutes to present her testimony.
Thank you, Chairman. Chairman Palazzo and Ranking Member Costello, members of the subcommittee, thank you for this opportunity to testify before the committee on the issue of extension of the Federal Aviation Administration's Launch Indemnification Program. As noted in the introductory remarks, I currently serve as Vice President of the Defense and Intelligence Business Unit for Digital Globe, Inc. Digital Globe is a leading global provider of high-resolution satellite imagery and related products and services. We operate a constellation of high-resolution electro-optical imaging satellites, and our business is highly dependent on the availability of reliable and cost-effective launch services. Our detailed written statement is on file with the committee, and so I'd like to use the time provided here to highlight certain points that as a consumer of launch services we view as significant. First, the reduced demand for launch services by the U.S. government and the corresponding increase in launch prices and reduction in launch vehicle options has, in our view, resulted in the U.S. launch services industry losing the global leadership position it once had. We see this as detrimental to U.S. national security interests, and it is certainly detrimental to the health of the broader U.S. industrial base. With regard to our specific business, the increase in launch costs has necessarily required us to seriously consider foreign launch providers. For our WorldView 3 launch, scheduled for launch in mid-2014, we went so far as to get necessary export approvals in place to allow us to select the foreign provider that bid for the launch. The single driving factor for considering a foreign launch at all was cost. In our experience, foreign launches are now on average 40% less than the current prices for U.S. launches. We ultimately selected a U.S. provider for WorldView 3 because we did not feel that the foreign provider's success record was well enough developed, but this is rapidly changing with each successful launch by a foreign provider. With regard to the specific issue before the committee, the extension of the Launch Indemnification Program, as a consumer of commercial launch services, we believe extension of the program is critical to encourage U.S. current providers to stay in the market and to incentivize new providers to enter the market. In our view, the indemnification program provides a degree of certainty around risk management for launch providers that is essential if U.S. launch capabilities are to remain, or some may say return, to a position of global leadership. Without the program, launch providers are operating in an environment of totally uncapped risk, which we believe will absolutely be reflected in prices that are passed on to launch consumers like Digital Globe. The U.S. launch services industry is already, in our view, not competitive with foreign providers on price, and it is rapidly losing its edge on technological superiority. As noted in our written statement, we believe we are at a tipping point in that any changes in the indemnification program that may lead to higher launch prices will result in foreign providers being the first choice for consumers like Digital Globe because the cost differential will be so significant and the technological differences will be so minimal. We see this as a very negative development, both from a national security standpoint and from our position as a U.S. company that consumes commercial launch services. We would much prefer to use a U.S. provider, but it is rapidly becoming an impractical option due to price and related considerations. That said, we are very encouraged by increasing private sector investments in U.S. launch capabilities. We believe that the private investment has potential to reverse the current downward trend and to once again return the U.S. to unquestioned superiority in launch capabilities. To succeed, however, will require that these companies have the ability to manage risk with some degree of certainty, and that is the very important role that is played by the indemnification program. It provides vital degree of certainty that allows providers to manage risk, and that is reflected in prices. In the time remaining, I would like to also encourage the subcommittee and Congress to consider elimination of the current 3-year sunset provision, or at a minimum to consider significant extension. We typically contract for launches 3 to 4 years ahead of the scheduled launch, and we believe that continued uncertainty around the status of the indemnification program will eventually translate into higher costs as providers hedge against potential shifts in the indemnification program. So in summary, as a consumer of commercial launch services, we encourage Congress to, at a minimum, extend the current program to continue to incentivize private investment in launch services industry, and to consider significant extension or ideally elimination of the current sunset provision. Thank you, and I'd be glad to answer any questions.
I thank the panel for their testimony. Reminding members that committee rules limit questioning to 5 minutes, the chair will at this point open the round of questions. The chair recognizes himself for 5 minutes. Dr. Neal, in your written testimony, you state that foreign launch providers are made competitive through government subsidies and preferential foreign national laws. How will extending the U.S. liability risk-sharing regime make domestic launch providers more competitive or level the playing field in the face of overt foreign subsidies to their launch providers?
Mr. Chairman, as was mentioned by several of the other witnesses, there are a number of factors that go into the selection of a launch provider for a particular mission. And an important one of those is cost, and the indemnification regime provides a piece of the cost because the provider must purchase insurance or otherwise look at the risks that it is facing financially in terms of its investments and its willingness to be in the market. So we believe that this provides at least a leveling of the playing field with foreign providers. And as the GAO has mentioned, in general, the foreign providers have more favorable indemnification systems under most circumstances.
You recommended a 5-year extension of the U.S. liability risk-sharing regime. How did you calculate that timeline? And for example, do you think the U.S. launch industry will sufficiently mature in 5 years to eliminate or phase out the regime? And is there a rationale for extending it indefinitely?
That's an excellent question. I think there's two factors that are in play here. From one perspective, as we've heard, industry very much likes certainty in terms of its planning for investment and future operations and hiring. So from the industry's perspective, it would be ideal to know in advance what the indemnification regime is. That would seem to argue for making the regime permanent. On the other hand, we certainly understand Congress's interest and desire to be able to periodically examine the program and see what works and what does not, whether any particular changes are necessary. And so, as we mentioned a number of times in the past, Congress has approved an extension for just a few years at a time. As a result, the administration believes that extending for 5 years would be a reasonable compromise, allowing at least some near-term certainty for industry in terms of its planning and allowing the Congress to take another look when things have matured. After 5 years, we should see a lot more activity in terms of the suborbital market that is starting to develop, and that may offer the Congress an opportunity to see if any additional changes are required.
Ms. Cackley, under the current risk-sharing regime, FAA sets a maximum probable loss value, which also serves as a threshold for the second tier, which is the liability assumed by the federal government. The first tier of coverage is capped and fixed at $500 million, but the second tier, the government's assumed risk, is adjusted for inflation, which began at $1.5 billion in 1989, and today is almost double that number. Is it prudent that the government should continue to assume greater and greater exposure under this shared risk regime while the first-tier private insurance remains fixed? And shouldn't the first-tier cap be adjusted for inflation as well?
It is our understanding that the first-tier cap is, well, I'm sorry, let me start over. We looked at what industry could provide in terms of first-tier coverage, and what we've been told through talking to insurance brokers and insurance providers is that where the first-tier cap is right now is the maximum of what industry is capable of providing, is willing to provide. So increasing using an inflation adjustment would take the first-tier cap beyond what we've been told industry is willing to go. Now that's where things stand right now. The question is in the future, and how quickly industry's capacity might increase enough to allow that to increase as well. We didn't look at that directly, and so I don't have an estimate of how soon that cap would be able to be increased.
Thank you. I now recognize Mr. Costello.
Thank you, Mr. Chairman. Dr. Neal and the other witnesses, I suspect I know the answer to this question, but I want to get it on the record. A few questions that I have, I suspect I know the answer. But given that there are other high-risk hazardous industries, such as the nuclear power industry, that does not have similar shared risk, why is it necessary for the government, for the federal government, to continue this structure for commercial space launch industry?
As you know, Congress originally structured this system based upon the nuclear power system, and so there were a number of examples that could be drawn on to form this. It appears that the current system represents a reasonable sharing of the risks between all of the key stakeholders, with the important point being that the most probable losses are covered by the operators themselves, and the less probable ones could potentially be covered by a congressional appropriation. So it seems to be a reasonable approach. The industry itself, of course, is relatively new, although there have been space launches for 50 years. The commercial sector is really only now starting to come into its own in terms of its potential in the future. So as we look at the insurance capacity that is available and the risks of potential catastrophic accidents, we'd like to see the industry grow and the insurance capacity increase and the vehicles continue to be made more and more safe going forward. But right now we think this is a reasonable approach to share the risks.
Ms. Cackley or other witnesses, will you want to comment?
I think I agree with the statement of Mr. Neal that at this point in time the industry is not at a place where they are capable of taking on what is a small probability but a very high value possibility, and which could basically wipe out a company or even several companies if more than one company is insuring a given launch where a catastrophic accident were to happen.
I guess I'd like to point out two differences in this industry. First is that it's something the United States needs for national security. Our military is completely dependent upon space capabilities to do the superb job they do of operating in modern combat, and we cannot allow that capability to be dependent on foreign suppliers. So as long as we're going to need a launch business, how can we spread some of that cost out? And then how big is the base we can spread that cost out amongst? In the nuclear power industry, nuclear power provides about 1/5 of American generating capability. That's about 60 million customers that can help share the cost of insuring those plants. In this case, you're talking even in the wildest hope of U.S. recapturing market share in the next 5 or 7 years, it might be 40 launches a year, 50 launches a year, tremendously increased from our 7 or 8 now, but nothing near to the point where each launch could only take a very small part of the risk if you were to eliminate the risk mitigation capability that's there right now.
Thank you.
We would echo that. I would describe the launch industry from the standpoint of a consumer as reemerging. It's been on years of decline, and it is now trying to recover. And the success, the factor that will determine whether or not it does succeed in recovering will be companies like SpaceX and smaller companies that are willing to invest in this industry. I don't think some of the smaller companies right now are prepared, even just on a strength of balance sheet basis, to self-insure, to take on these risks right now, to self-insure. And any incremental cost for even the larger providers, I can tell you as a consumer, will drive us, not out of desire, but out of necessity, to foreign providers, because when we are forced in a position to pay 40% premium or more on launches, we either have to reflect that in our pricing to our customers, and our largest customer is the U.S. government, or we have to absorb that and take it out of our margins, and at some point that just has such a negative effect on our bottom line that we have no choice but to go to foreign providers. So the indemnification program I really see as a backstop that will help turn this industry around and return it to a thriving industry. We hope, because we would very much prefer to be launching on U.S. providers.
Thank you. Dr. Neild, under the existing regime, would the FAA calculate the risk of potential third-party losses for unmanned versus manned or orbital versus suborbital flights differently? And if not, should they?
We would use the same methodology, and we think that's appropriate. And the reason for that is, again, the purpose of the indemnification regime is to provide for the payments of third-party claims. So it does not apply to either the flight crew or the spaceflight participants. What's on the rocket basically does not matter. What matters is the potential damage is done to the members of the public or to property on the ground. So the numbers theoretically could come out different depending on how reliable the system is, where the launch takes place, and so forth, but the general methodology would be the same.
Ms. Cackley, did the GAO look at how the FAA approach to calculating the MPL compares to other methods of assessing risk? And if so, what did you find?
We did look at the maximum probable loss calculation that FAA does, and we found that it is quite different from the way the industry in general does that calculation. In some instances, it's almost in a reverse order, where FAA starts with calculating the loss of casualties and then calculates property damages as just a 50% of what the total casualty loss is. The industry, on the other hand, told us that they start from doing a much more sophisticated model-based simulation of property damage, and then do their calculation of casualties based on the area that their estimates calculate would be covered by an accident.
And you have recommended that the FAA change their methodology?
We are definitely looking at the methodology and have some questions and suggestions for them about ways to improve it.
Very good. Thank you, Mr. Chairman.
I now recognize the gentleman from California, Mr. Rohrbacher.
Thank you very much, Mr. Chairman. I remember when we were trying to get this through the very first time, and it almost did not pass. And in fact, I was told to pull the bill right before it went for a vote because we didn't have the votes. And let me just note, it was a bipartisan effort that saved it. And I remember quite well the Democrats who came over and helped us on this very much. What if this wouldn't have passed? Would there be a SpaceX and Orbital and some of these private companies today? What if we would not have passed the Commercial Space Act of 2004?
It's difficult to say. I think part of the answer would be there would still be a market out there. There would still be a market for the U.S. government. In my experience, and you know, as you're aware because of the experience with Huntington Beach with the Delta launch vehicle, you know, there was a government customer out there which ULA still supports. There are occasional commercial launches which they still support, but they could be so much hurt by that. The commercial launches could go away, and then the government would be left with picking up the full costs of these launch providers. At the end of the day, you still need GPS, you still need MilSatcom or AEHF and similar systems, and so that's really the risk out there. Launch services can be provided, and the question is, how can we make that grow? How can we broaden the space economy and make that bigger for
Well, that was the big question, and we either had to go this route that we're talking about, or there was another route that was lawyers in space. The lawyers in space program, we would shoot them into space, and and that might take care of the problem. But of course, we chose the more focused approach, and went with indemnification. Today, we're talking about a company has basically $2.7 billion worth of protection. Is that it?
So again, the amount of insurance that the company must procure is based on the maximum probable loss up to a level of $500 million or whatever insurance is available at reasonable market prices. Above that, then Congress would have the opportunity to appropriate up to $1.5 billion in just for inflation, which is $2.7 billion. If the claims exceed even that total, then the responsibility again reverts to the launch operator.
But up until $500 million, the company would have to pay itself. So the company's not off the hook. We're actually not taking responsibility off their shoulders. We're just sort of making sure that it's not such a great threat that nobody wants to participate.
That's correct.
And we have competition with Russia and France and China. Now, of course, we know people who stick their head up and sue people at least in Russia and China. That doesn't happen unless the government really wants them to. What about in France? And do they have, what about our European competition? Do they have this indemnification, and what does that look like?
Based on the studies that have been previously done, all of the other spacefaring states, such as the ones that you have mentioned, have similar indemnification regimes, although in general they're more favorable because instead of a three-tiered system, they only have two-tier, where, again, the company would typically purchase insurance up to some amount, but then the government would step in without limit to pick up any claims above that level.
Okay. Well, I would, and do you believe, might go down the line, do you want this, so we just take the, take the provision out in terms of having to revote on this every, is it 4 years or 5 years? What, how many years do we have before we have to do it again?
3.
What's the sunset provision on this?
It ends this year, and it's varied over the last 4 years, last 4 times it's been reauthorized. Right. I would just note that if you look at the development time, 5 years for a launch vehicle, launch system, is not an uncharacteristic time from the time you first get the idea you want to go build a product to the time you actually do your first launch.
So if we keep the sunset provisions, we should not have to do it for another 5 years.
Well, I would hope at a minimum, but I'd also point out that launch contracts typically happen 2 or more years in advance. And so if you really want to look at the cycle time of the industry, it's longer than 3 to 5 years from the time you first start thinking you're going to do something to you start providing regular services to customers. And the closer we can get to that cycle time of the industry, the better it will be for investment decisions and the more likely we are to attract capital to develop new capabilities.
Okay, thank you very much.
Okay. I now recognize the gentlelady from Maryland, Ms. Edwards.
Thank you, Mr. Chairman. And for Mr. Rohrbacher, just for the record, I'm a lawyer, and I actually do want to go to space, and I want to make sure there's an appropriate MPL calculation for that trip.
Yeah, but our program didn't have any provisions for the lawyers coming back down.
Right. I do want to come back. So thank you. I've been looking at this question for a bit of indemnification, and really my concern has been if there's some predictability in terms of what the obligation of the taxpayer would be and how we can establish more predictability with a model that has, some way to more reasonably calculate what that liability would be. And so I wonder, Dr. Neal, I want to talk to you about the modeling that's used for airline carriers, in other examples, and perhaps we can get a comment also from GAO about this, that would give us a little bit more predictability in terms of taxpayer obligation beyond the cap.
So we are eager to look at all kinds of improvements on how we do what we do, and we would solicit recommendations from GAO, from the Congress, from industry experts about the best way to do that. In fact, we have already begun an internal effort to look at alternate methodologies that could be looked at, and we discussed some of these with the GAO as they prepared their report and shared some of our thoughts on that. And we certainly benefited from that discussion and would think it would be an excellent idea to review the methodologies that could be used. I would point out that the GAO had noted that in its discussions, it found that sometimes a sophisticated model could require, for example, the purchase of a database costing many hundreds of thousands of dollars and experts in order to operate that. So we need to make sure that we balance what the cost is and what the benefits are, and does it really change the MPL? And then we can decide whether that would be an appropriate change to make.
Ms. Cackley, before you comment, I wonder if you could give us some idea. I'm trying to figure out how it is that, we recognize that the industry, the commercial industry, is not mature yet. That's understandable. And I guess that that's some justification for some amount of indemnification. And so my question, though, goes to how we can move the industry along so that it becomes mature enough to, to indemnify itself rather than to have, over a course of time, taxpayers foot that. And do you have some ideas about if we were, for example, to extend for a temporary period, is there some way in which we can, markers that we can identify that could move the industry along to getting some more predictability for a better model, so that there's some rationale to why we would have a cap or why we'd eliminate a cap? What are the things that we could ask for in an interim period that could help move the industry along to so that indemnification catches up with maturity?
I think one of the key things that has to happen is just enough launches have to take place so that industry has we have a better track record for different vehicles, for different companies, so that risk assessments can be done that take advantage of more sophisticated methodologies, that take advantage of things like simulation, modeling, and that allow for better understanding of probabilities, a richer set of probabilities that can be modeled using computer-based technology. And that will require certainly data. It requires some expenditure of funds for the modeling, but it also requires time for enough launches to happen that you have a better understanding of what the risks are based on a track record.
So rather than a 5-year extension, for example, we could do something shorter and then use this time to begin deliberately gathering the kind of data that we need, right?
It's definitely important to be gathering the data. I don't have a specific time period that I think is the ideal time period, but certainly we don't think that it would be a good idea to continue with the calculations that we're using and continue that indefinitely.
Thank you. Thank you, Mr. Chairman.
I now recognize the gentlelady, Ms. Adams from Florida.
Thank you, Mr. Chairman. Ms. Cackley, I've been listening, and I've listened to your discussion about lack of data, you're going to need more data, and I want to kind of start off where my colleague over there left off. She was asking, and you said, well, we need time for enough launches to take place, with the different vehicles and the different categories, and then you need to use the technology from computerizing to do some kind of simulation. The question I have is, aren't these vehicles changing rapidly as we're moving forward, or are they staying the same?
Different vehicles are definitely being developed, so that it depends which vehicle you use. Different vehicles for different purposes.
Correct.
So there are some will have better track records than others, and you're right. That is definitely a something that will it will always be true that technology will change, and so I mean that's another reason why insurance is provided.
Well, then my question is, how long do you need with these different vehicles to have the capability of determining the time enough to make that determination, I guess is the best way to ask it.
Right. And I don't have an answer specifically, but I think what we would suggest is that there are risk assessment experts who could tell you and who should be consulted and be part of the discussion.
Right, and I know, Dr. Neild, we've talked a lot about the modeling for the calculating the maximum probable loss, and we all understand the model hasn't been updated since '88, and GAO has some concerns with that, and we've heard a lot about that today. Do you believe that you will be trying to do some kind of update to it?
Yes, very definitely. We benefited from our discussions with GAO, and if there are additional ideas, we would welcome them.
And Ms. Cackley, in the absence of current indemnification system in the United States, would it be possible for the commercial launch system industry to survive?
In the absence of indemnification, completely, I think that it's not that the market would go away. It would, but there would be probably a large contraction of capacity of insurance, and there would be a great increase in costs potentially. At some point, I think other witnesses have talked about whether that's sustainable in the long term, but we didn't really look at what that length of time might be.
Has there ever been an estimate of the increase in the insurance cost if the launch indemnification were to lapse?
No, we have not done that estimate.
Mr. Slazer, if launch indemnification was allowed to sunset, is it your opinion that the launch industrial base would begin to deteriorate rapidly?
Given our low number of launches historically the last several years, I don't know if it would deteriorate much more, but it certainly wouldn't improve. It's more the upside that we're risking. And I just want to take one quick second to point out a distinction here. Launch vehicles have launched for many years, and some of them haven't changed very much. Delta II has been pretty much the same since about 1997, 1998. The Soyuz has been around since about the 1960s. Those launch vehicles, the maturity helps refine your understanding of the probability of loss and the potential consequences of the loss. At the same time, two vehicles that are both mature, if one provider has a subsidized indemnification capability, as with Soyuz, and the other, as with Delta II, does not, you may wind up having the U.S. provider being at a competitive disadvantage and going out of business anyway, even if they're equally mature. So maturity has to be looked at. It's not going to be the answer to this. That just helps you make a better determination of your risk. It's not going to solve the issue.
So, again, I'll go back to Ms. Cackley then. With what Mr. Slazer's just said, we do have enough launches under our belts on some of these, and so we could be using that to identify possibly, is that not correct?
Identify
what, we're talking about how do we decide how to indemnify or how to, and earlier when I said something about they're changing, and they are changing, but we do have, as Mr. Slazer just said, we have vehicles that have been operating, although they have changed slightly throughout the years, they are mature enough.
Absolutely, and there is a market of space insurance providers who told us that they would be willing to indemnify at a higher level than the current maximum probable loss of the average current maximum probable loss of flights launches now. Part of what we discovered was that there's a difference between what the insurance companies provide now and what they said that they would be willing to provide in the future that is currently covered by government indemnification. That's not to say that there's no need for any government indemnification, but might be able to start at a higher level than it currently does.
Okay, earlier, because I'm getting confused, and I just want to make sure, earlier you said they're not capable or willing to provide, and now you're saying that there have been some that have said they could.
They're not willing to provide beyond $500 million, but right now they're not asked to provide beyond the maximum probable loss, which is much lower. At $99 million is the average. So what we're suggesting is that there is some room for the market to provide some indemnification at a higher level than they currently do, but still not completely indemnify it up to whatever maximum there is.
I want to welcome Chairman Hall to our hearing and recognize him for 5 minutes.
Mr. Chairman, thank you. And I'm hesitant to ask anything because I've not been here and don't know what questions they've been asked, but I listened to the gentleman from California and his debate with Ms. Edwards. I can't figure out who won that, but I'm always on her side, usually. And the chairman from California mentioned France. That doesn't do anything to me. There's not a nation in the world they won't surrender to. They'll fight to the last American, is the way they've been. So I wouldn't even consider them, but I do consider this. Some might be tempted to argue that it's such a small share of no practical consequence. I don't agree with that. I think, I'm convinced that without it, what small share we now have would all but disappear if we don't take some action, and I think we're going to. And FAA's launch indemnification program is critical to our launch industry and its aspirations to compete for future business. I actually look forward to working with you, Mr. Chairman, on moving the extension through the House this year. It can be done. It probably ought to be done. And I yield back my time. And I thank you, Mr. Chairman, for the good work you're doing.
Thank you, Mr. Chairman. I now recognize the gentleman from Alabama, Mr. Brooks.
Thank you, Mr. Chairman. I'm a strong believer in the free enterprise system, which typically means less government, not more government intervention in the marketplace. Typically, government intervention results in distortions in the marketplace, less efficiency, and more cost to taxpayers. At the same time, as you're very well familiar, America faces probably its greatest financial challenge since the War of 1812, when we last went into bankruptcy, not long after that war. We've got deficits, probably going to be our $4th trillion deficit in a row. We've got a debt where we blew through $15 trillion last year. We're going to blow through $16 trillion this year. Just the increase in 1 year from FY 2010 to FY 2011 and the cost of servicing that debt is larger than the cost, this is 1 year increase now, is larger than the entire cost of the NASA program, all of our space activities. So with that as a backdrop, I want you all to help me out as best you can. Taxpayers are being asked to be on the potential hook for roughly $2.7 billion should we have a private sector space catastrophe of some kind. And I understand your argument about competition and how this help is needed with respect to that foreign competition, but we've got other industries in America who also would love to have their insurance costs subsidized by the federal government and America's taxpayers. You could talk about steel manufacturing, ship construction, bridge construction for our highways, auto industry. Just every industry would love to have the similar kind of subsidy of its operational costs that the commercial space is asking of this United States Congress. And so what I'd like for you to help me with is, why should commercial space receive insurance subsidies but not these other industries that are also facing stiff foreign competition that threatens to put them out of business? And how do you distinguish commercial space from these other American industries that are similarly facing stiff foreign competition, such that you all should receive an insurance subsidy but they should not? And I'd ask for each of you to respond.
I would start by reminding you that there actually has been no cost to the Treasury or to the general public in the 24 years that this system has been in place, and that should there be a low probability but high cost catastrophe at some point in the future, Congress would have the ability to make a decision whether or not to appropriate the funds above the cost of the insurance. The other key point is to recognize that although we're continuing to look at alternate methodologies and the best way to calculate things, we are very confident, the FAA, that we have a conservative calculation system today, and that the probability that the losses would exceed the maximum probable loss value that would be covered by insurance is very, very small, on the order of 1 in 10 million. So there would need to be 10 million launches before one would expect to see the indemnification kick in.
All right, thank you. And I'm looking at my committee notes that are similar to what you just said, and I'll read it into the record. In what is commonly referred to as indemnification, should any successful third-party claim be in excess of the MPL-based insurance requirement, then the U.S. government is authorized to pay up to an additional $1.5 billion, adjusted for post-1988 inflation approximately $2.7 billion today. The payment is not automatic and subject to congressional appropriations. But I infer you're here today because you're expecting that Congress will, in fact, provide that indemnification should we have some catastrophic accident. And so, Ms. Cackley, what do you suggest, or what are your thoughts on this? How do we distinguish?
I think that it is true that the industry does expect that Congress will appropriate the funds if there were if indemnification came into play, even though it is subject to appropriation. It's part of what the industry told us is what makes them willing to invest in and be part of the market is that they believe that there is that backstop. To your further question about why this industry and not others, that's not something that GAO is taking a position on. We've done the work to explain what we learn as much as we could about how the program works, but we don't have a position on why space and not any other particular market.
Mr. Slazer?
Yeah, I think the answer is that you're going to need this whether or not there's a commercial market or not. Other industries aren't in that same position. We can import those products, we can do without them, we can make other substitutions, but we need to have a space launch capability for our national security. As a result, we can choose to spread those fixed costs of development and operations over a broader base by bringing in commercial businesses and potentially expand that base to the point where it actually becomes a job and revenue generator kicking back into the Treasury. Or we can go down to a minimalistic set of launches and have very high costs. I would contend that's kind of the inflection point we've been at these last couple of years. And that's why we've seen costs for DoD launches, costs for NASA launches. NASA's been having a great deal of difficulty getting their science program launched because costs have risen so much. We've got the prospect in the near future, as new companies come online, as new capabilities by existing companies are expanded, to start bringing those costs down and spreading that fixed costs out. But we have to keep this regime in place to make that business case work.
Mr. Chairman, my time has expired, but is there any chance you'd allow sufficient time for Ms. Alfers to also respond?
Yes.
Okay, thank you. We would echo the national security concern. The U.S. government needs to have domestic launch capabilities available. And in addition to spreading the fixed costs, there is also an issue of maintaining the skill set. The launch business is a highly technical business. I mean, it is very complicated, and there are a handful of people that do this and do this well. And when you take a factory and you shut it down to the point where you're running one car off about every 4 years, you lose that skill set. And that is a very high-risk situation for the U.S. government for when they need to call on those resources. Right now, the payloads that we launch are heavily relied upon by the U.S. government. Our largest customer is NGA, the National Geospatial Intelligence Agency. And I will tell you that the U.S. launch market right now is not appealing to launch on. And we are looking at foreign launches for our next generation satellite. And unless there are new vehicles that come into the market. And I want to make this point. There was discussion about the Delta II. One of the things that has happened as a result of the reduction in demand is that some of the launch vehicles that have been highly reliable and are more appropriately sized for commercial payloads are not available. We're being forced to launch on an Atlas V. I shouldn't say forced, but we're launching on an Atlas V, which is a much more expensive and much larger vehicle than we would prefer to launch on, and that is simply a product of or byproduct of the declining U.S. launch industry. So in the interest of national security, we think it is very important that the U.S. industry fosters innovation, and we see the indemnification program supporting that because it does fix risks to some degree for the launch providers. And without that, to answer an earlier question, I actually do think the U.S. launch industry will gradually fade away to a point that will be very detrimental to national security.
Thank you for your insight, and Mr. Chairman, thank you for the additional time.
At this time, we're going to enter into a second round of questions where each member will be allowed the opportunity to ask one question. And we will begin with the gentlelady from Maryland, Ms. Edwards.
Thank you, Mr. Chairman. I just have a couple of questions here. Ms. Cackley, there's been a lot of discussion about the impact on international competitiveness. Did GAO find any documented evidence regarding the impact of shared risk third-party liability on international competitiveness, or analysis that if we didn't have that protection, it would result in the loss of business to foreign launch providers?
We did not find documented evidence. We certainly talked to launch customers who told us that because their two main factors that they look at are price and reliability, and the indemnification has an impact on price, you can make the connection that it has some impact, but we could not quantify that.
Are there other factors that impact competitiveness of the domestic launch provider? Besides
there's
the
a lot of
risk regime?
No, there are certainly many factors that affect competitiveness besides this regime.
And even though we've had the shared risk, we've still lost market share, right?
That's right.
And then I just have a question regarding the analysis about behavior. Has GAO made any determination, or Dr. Neal, perhaps you could answer this, as to whether risk management practices among the providers, among the companies, would be affected by eliminating the cap?
In our discussions, it certainly has been made very clear that industry considers the current indemnification regime to be vital. The big concern I would have is that in the worst case, a straightforward business decision would be made that says, again, we can't afford to bet the company, and so we're just going to withdraw from the industry. And it's hard to predict the likelihood of that, but that is certainly a very real possibility.
Well, I'm wondering, Mr. Slazer, if you could comment, because my question is what the risk management practices of a company would be if they knew that they wouldn't be on the hook for anything. Because I would think that would actually result in a greater probability of liability for taxpayers.
Yeah, I guess it's important to remember we're talking here about third-party indemnification. And so any of these companies that are getting into this business are putting hundreds, more likely billions of dollars of their own shareholders' capital at stake in developing these systems. And it's not in their interest to do something that's not going to work well. They're going to do everything they can to succeed in that business. And with so many providers in a very competitive international market with very good reliability rates, if you show any indication that you aren't able to deliver reliably, whether or not you have third-party liability issues or not, you're going to lose business. And so it's the company's own self-motivation to make their businesses succeed that are going to make them highly motivated to succeed, regardless of if they're completely indemnified for third-party issues, which they're not in the current regime.
Well, so then that would also be an argument for keeping the cap too, right? Why not?
The only reason there would be the competitive relative impact on pricing. So the number
so what's the documented evidence that you have that there would be an impact on competitiveness?
The one number I've seen out there, which goes back, that I recall, that goes back to an aerospace corporation study in about 2006, that I believe is still accurate, is that the European launcher Aeronautics has a requirement for indemnification insurance for a maximum probable loss of about $75 million. Vice are $500 million.
I have a note from that same aerospace corporation study in 2006. It says, measuring the contribution of indemnification itself, which is critical to considering amendments to eliminate it, or at the other extreme, altering it to reallocate more risk to the government, is impossible. Do you agree with that?
It is extremely difficult, and I'd throw in another factor that's extremely difficult is where companies are operating. If you're operating on the plains of Kazakhstan, where like no one's in the range of possibly being hit by any debris, I suspect your indemnification costs are going to have another natural advantage by being lower. But it is very difficult to make that determination.
And just lastly, Mr. Slazer, what extent do commercial launch providers purchase third-party liability insurance above the level required by the MPL before you'd reach the cap?
I'm afraid I'm not able to answer that question.
It would be helpful for the industry to be able to answer the question as to how much they, I mean, because, you know, otherwise in between 99 million and 500 million, that's a really big number. Who's on the hook for that?
I will take the action to try to get you some answers.
Thank you.
On that.
Thank you, Mr. Chairman.
The gentlelady's time has expired. I will ask my one question, but of two people. Would the FAA need additional, this is for Dr. Neal, will the FAA need additional regulatory authorities to extend the liability risk sharing regime to on-orbit activity?
Yes, we would. As you know, we currently have regulatory authority only over launch and reentry. And so as the GAO report has pointed out, there's a gap in terms of the indemnification and in terms of regulatory authority. We've been in discussion with some other government agencies about the potential benefits of FAA asking for on-orbit authority, and that's certainly an item for further discussion.
Ms. Cackley, would you like to add to that?
We certainly recognize that if the FAA is regulating on-orbit activities and licensing for on-orbit activities, it is going to increase the number of possible activities that could be eligible for coverage under CSLA. And to the extent that there are more of these activities, there will be increased risk to the government in the case of an accident of this type.
I want to thank the witnesses for their valuable testimony and the members for their questions. The members of the subcommittee may have additional questions for the witnesses, and we will ask you to respond to those in writing. The record will remain open for 2 weeks for additional comments and statements from members. The witnesses are excused, and this hearing is adjourned.